Welcome to the Landis Look, where we take an inside look at the world of real estate. And last week we looked at what it takes to buy your first investment property. I appreciate all of y'all that reached out to us about that. We had a lot of questions, and so today what I'm going to do is I'm going to give an actual example of a property that one of our clients recently purchased in the last month actually, so you can see some real numbers of what is possible with an investment property. And so if you've ever read about investment properties or looked at them, you may have heard the 1% rule, where the monthly rent is 1% of the purchase price. So if the purchase price is $200,000, you're shooting for a monthly rent of $2,000 per month. In Atlanta, that is hard to do. I mean, you just don't see that all the time. It is possible, as we'll find out, but it is hard to do. We recently had a client who beat that number, and I'll show you how good that makes the numbers. This was a house. It's inside the perimeter in 30316, which is a zip code for East Atlanta. And it was a property that he purchased for $230,000, and it was renovated. And one of the awesome things about this property, and this can be great for rentals, is it had two levels. And so it had a top level and a bottom level that could be rented either together or separately. So we're going to show the numbers. If you want to download our spreadsheet and you didn't get the chance to do that already, we've got that in the link below this video, and that'll just show you a little estimate for what the rental numbers look like, and you can follow along with what I'm going to go through here. So the rent that we got for this, and he's actually already done this, so this is not an estimate, this is actual rent, was $2,800 in a month total for the 2 floors. We did take into account, because this does happen in this model, we looked at, is there going to be some vacancy? And if you think, hey, 1 month vacancy out of the year, that would be 8% of the year. Hopefully you do better than that, but you better have some vacancy in your model. A repair estimate. So this house was already in good condition, did require, a few finishing touches, but had recently been renovated. So not a big number on that. And this number could vary wildly depending if you're buying something that is new, something that's a condo, something that's old, but you're going to have repairs every property. So we do have that in. We also have a line for management costs. A lot of our folks, when they have 1 or 2, like to manage them themselves. Even if they don't want to do it long term, they like to try it out at first so they can get a handle for what it potentially could look like and to know if a management company is doing a good job. If you do want to use a management company, they typically charge in the 8 to 10% range, and obviously that eliminates the call in the middle of the night that the toilet is stopped up or that you've got a leak or something along those lines. So you can put all of that stuff in the spreadsheet and take a look and see what that comes out. And then you do have your actual costs that on the house. So the property taxes on this property were just under $3,000 per year. So when you break that down monthly, we have for utilities, and this you may not have on a single family, utilities, but you may have a solid waste bill where you're taking care of the solid waste that comes out a little bit, but there's a line there, you can put something in for that. And then you obviously have insurance on the property. And so on this property, we estimated about $1,500 per year. And that, once again, varies based on the property, the type coverage you're getting, but this is going to give us a look at this actual property. Here's the awesome thing. This house only cost $230,000. $230,000, $2,800 per month rent. If you made a 25% down payment on this, then you're probably in the ballpark 4.75% interest rate, depending on the type of loan and closing costs you're getting. But for this example, 4.75% interest rate, 25% down. Listen to these numbers. You have a monthly rent, $2,800 per month. Your monthly principal, interest, taxes, and insurance mortgage payment, you're only looking in like the $1,300 per month. Your principal and interest in this case is actually like right at $900 per month. That is a big spread before all the other things such as repairs or vacancy that you could have to deal with. So as you put it in this model, and this is just a model, but the 30-year fixed, you're producing a positive cash flow of over $900 per month. That is pretty amazing. I think this is even cooler, and if any of y'all watched one of our earlier videos on paying for college with 1 phone call, well, 2 phone calls, what if you got a 15-year mortgage on a property like this and your child was 3 years or less? So the property is paid off at the end of those, when the child's 18 and ready to go to college. Well, we said in that example, hey, it'd just be awesome if you didn't make any cash flow as time went. You just had the property paid off at the end. That would be great. But what if you had bought this property and the monthly cash flow with a 15-year mortgage, because interest rates are lower on a 15-year mortgage than they are on a 30-year mortgage. So in this example, we use an interest rate of 4%. You're still making a positive cash flow in like the $800 or $900 per month range. How amazing is that? Positive cash flow, and the property's paid off by someone else in 15 years. Now, I will say this is not a deal that comes along every day. So if 1,000 of y'all reach out to me tomorrow and you say, hey, can we buy 1,000 of these, each one buy one this week? We cannot do that this week. But this is a property that it was listed. It was listed on the MLS. That wasn't like a distressed situation where we took advantage of somebody that had to sell their house. This was a house that anyone could have purchased that was on the MLS. And while these numbers are pretty awesome and we may not be able to get these time after time after time again, this is what is possible, and numbers that come close to this, definitely realistic. So if you're interested in seeing properties like this and seeing what we come across each week, there's a couple things you can do. First, you can sign up to be on our weekly email list where we will email out on Friday properties that we've seen that have caught our eye. If you like them, you can respond to us. We can help you figure them out. If you don't like it, it was one email, and at least you know you didn't miss out on a good deal. Secondly, if you want to start your search in earnest, go ahead and send us a message, and we're happy to talk through your specific investment goals and what would be best for you and help you figure out how to get the right property. So I appreciate you all listening today, and we will see you next week.